to the closing beat, everybody. Happy Thursday to you. How you doing out there? All is good? Hope you're doing well. It's finally getting a little warmer here in Florida, so we're happy with that. We've got to get you a new keyboard. We have got to get you. His keyboard sounds like a bunch of tap dancers out of sequence. That's exactly what it sounds like. My Lord, a Christmas gift. I just thought of something. Hey, while other advisors are playing checkers, we were playing chess here. Had a client that said, I want to work through my whole balance sheet, and I want my balance sheet to yield a positive yield in terms of like the debt that they have and the income they have coming in. And I was like, cool. You know, I brought that up before. Let's go through it. Figuring out how you can have debt and actually still keep making money. So that was really cool. Now, if you're against debt, of course, I'm not going to, you pay it off, right? Wine and Wealth tonight. We'll be at 8 o'clock. Grab a glass of wine. Come hang out with us. If you're one of our clients, we do this every Thursday for you. Tonight, we'll be quick with you. We're going to talk about some additions, some updates into both the dojo and your portal as well, and some new cool things that we have access to now that we're doing like the rich people do. We have access to all of Goldman Sachs, whereas normally you knock on their door, and you ain't got $10 million. They're not going to even answer the door. They're going to send security out after you. All right, we're going to talk about the stock market here today, and I'll be brief with you. I understand you got things going on there. Appreciate you watching. I'm going to start with the Dow. Right over here. So this is going to be the focus of the day. It's the big number. Oh my God, the Dow's up today. It was the focus today, thanks to Salesforce.com and honorable mention to United Healthcare, right? Salesforce, we happen to own it. It's our biggest winner here today. United Healthcare, second biggest there, or not second, but was one of our bigger winners. Both of those account for most of the Dow's gains. If you look at Salesforce today, because it's a price-weighted index, remember the S&P is market cap weighted, fancy way of saying however much you're worth is how much say you have. The more worth you have, the more say you have. If you look at Salesforce, you got about 130 points, well, more than that just came from Salesforce. If you look at United Healthcare, 110 points actually come from United Healthcare, right? So simple as that one there. Now, the Dow was negative about not even 30 days ago, right? So the Dow was down about 30 days ago. Now it's up 8%. Just to put in perspective the velocity of that move, right? 8%, 30 days, an amazing, amazing recovery there by the Dow. And of course, that's why it's in the middle of the headlines there. Now, 40%, just about 40% of the Dow is actually still down for the year. Chevron's a good one to take a look at there. So some of these names fighting to be the dogs of the Dow for the year, but don't mistake yourself and think that, oh my God, the Dow's taken off. This must be something. I need to be a part of the Dow there. Really, really kind of a trick. The Russell, the only index that has yet to get above the 200-day moving average, by the way. That's what's used as like a sign of changing momentum. If the 200-day moving average is flat, then most people will see that as more of like a sort of a transparent, like, oh, nobody's paying attention. When the 200-day moving average is trending, in particular when it's trending down and we break above it, a lot of people use that as potentially a sign of momentum, small cap buying, and things like that. I would also point out, just going to say it again, because I've been picking on you guys this week, that'd be 4 of the last 5 days now where the Russell has outperformed the S&P there. It has also outperformed the S&P over the last 1 month there, which begs the question, are people rotating out of large caps and then taking profits, essentially? Maybe they're overweight large caps, like a rebalancing kind of a thing, and then putting in the money to the small caps, because that's really the last discounted area you can go. Certainly looks like that. However, it's very difficult to say that that's the case. You won't find anybody saying that doesn't want to be ultra sure about what they say, because it's also a tax harvesting time of year. So it could very well be that people look at large caps and they say, it's been a good run. I've had a large cap growth position here. I don't need that much. I got a loss on some of my other positions or whatever. I'll sell some of it to offset the taxable gain there. So it very well could be something like that. All right, going over to the S&P here, the title of today's show, the stock market's so perfectly average at the moment, not only on a total basis. This is a bit of an old chart here, but I'll share this with you. Not only on a total basis where it's performing just like it averages over the long run since 1945, actually. But if we take another look a little bit deeper, does this look like anything to you? This is this week. This is just this week's performance in the S&P. What do we talk about? The beginning of the week here, we said the S&P in the Thanksgiving week, average performance is a gain of 0.19%. And it's positive 55% of the time if you just look at every post-Thanksgiving week. What's it up now? A last-minute rally in the stock market today puts it up for the week 0.25%. Why didn't it go up 0.5%? Why didn't it go up 1%? It was such a quick rally. Why couldn't we do it sooner and get going? Because people know that. The algorithms know that. So this is average. We were below average performance for the week. Now we're basically right back where we started. Sets up a potential for tomorrow to be flat, choppy, back and forth. I mean, I could blow the doors off and just continue higher, but why would it? What's the catalyst? What would cause that to happen? So a little bit of a heads up there, and I love sharing data ahead of time and then coming back and going, I mean, didn't do exactly the same thing, but it had the same behavior, right? Very, very cool there. Where was the weakness today, by the way? Large caps. We've been talking about that. Don't chase, don't chase, don't chase. Look around here, sorry. You got NVIDIA, refused to participate today. And AMD, just sticking in the same space, it didn't want to participate. Tesla comes out with their new truck. They're like, oh man, this is cool. Yeah, it's kind of cool. It didn't participate today. This is a market, the S&P is a market cap weighted index there. So it needed these big guys to participate. Alphabet didn't participate. I keep going. Meta didn't participate. What happens? People are taking their money. You can see the rotation. Now, I don't know if it's a rotation in the small caps because they believe it's going to go up, or if it's just simply profit taking going in to the end of the year. Literally, every sector today was positive except the three that have the large, large cap tech stocks, right? Actually, I got to take it back. Tech just finished positive there, right? But they're not the leaders. They're at the bottom of the list today. Why? We need those things to lead the way to get the markets to go higher. There's not a lot of action there. I'm not saying to run from small caps. I know I picked on, or large caps. I know I picked on that a lot this week. I'm not saying to run from them. I'm saying don't chase them at this point. You now have a week's worth of data, almost a full week's worth of data, to suggest that it's just not the most ideal time to say, yeah, let me get out of mid caps. Now, I don't disagree with mid caps, but small caps, let me get out of real estate, let me get out of all this stuff and go into large caps. Everything else is outperforming what you're running into. So just be very, very careful with that. Again, I wouldn't fault you for mid caps. You know, I'm not in love with that area right now. It was the best performer today. Large caps, small caps, they all underperform mid caps, but that's just one day. So I'm not going to go there yet. All right, crude oil here. This is why I don't fight the trend, right? It's clearly in a downtrend. I don't know. This is a very, very tough short-term time to say, I'd like to get some oil there. You have going on, and it's a bit of a debate out there right now. So OPEC is supposed to continue their cuts. And most of the country, actually all the countries came out, and even Russia, said, we're going to cut, okay, we'll stick with our 500,000 barrel per day cut. However, they were all very clear to say, we'll follow the voluntary cut. It's not mandatory. They haven't agreed. They haven't shaken hands. And even if they've shaken hands, a lot of those countries have gone back on shaking their hands before. It's, gentlemen's bet they break. But that's what's going on in the oil markets right now. It's like, okay, we can't trust that they're going to cut. They say they're going to, but there's no official game plan to do so. All right. If you look at gold, I want to point this one out. All right. So we've seen a quick little run up to highs. And the question is, do you expect it to continue? Well, there's something interesting happening here. We obviously have the momentum, right? That's cool. I can get on board with that. If I see a stock do that, you go, great, okay, I like it on a pullback or something. But see how in this case, the blue line is going above and crossing above the red line? It's a really simple way of saying the momentum is shifting in the midterm. Okay, we can see right here, this is very strong. But if you look back a little bit, you go, wow, what a shift in momentum there, which has caused that 50-day to go over the 200-day. They call that a golden cross. You guys know from the data there that a golden cross in the world of gold is really not something to get excited about. The next 1 week tends to average a slight pullback. A month, 3 months, 6 months, you get a pullback or choppy gold market. It does take a while, but gold does tend to get going again. If you look at the probability of you entering a position in a 1 week period following the Golden Cross, which is, we're here, we're living it. The probability of you having a profit after that happens is 53%. It's better than the S&P, right? But it's still not very good. Over the next 1 month, you can see you have a very low probability of saying, I'm going to get into gold and I expect to see a positive unrealized return while I wait for whatever to happen there. So careful, careful, careful if you are going to play around in gold. Just one other thing to point out. Lastly, let me just hit this real quick. Pull back in bonds today, meaning interest rates went up. That's okay. You know what I mean? Like overnight, if you follow all around the world, there was a lot of inflation data that came in weaker than expected. So that kind of bodes well for us here in the mornings, but the Fed's been pretty clear about what their plans are. All right, let's go over to some stocks in the news here, and then I'll take your questions. Get ready for Wine and Wealth here tonight. Salesforce.com, our best performer here today. They beat on earnings, but think about this. That's fine. They beat expectations. Oh, yeah, that's really good there. Raised guidance going forward. Compare this to Petco that we talked to yesterday. I know, two totally different companies. Compare it to Petco. What is so exciting about Salesforce? Just the numbers. Pretend you don't know what they do. What's so exciting is their cash flow. Cash, which Petco doesn't have. We talked about that. Bankrupt, right? So Salesforce, cash flows came in 50% better than expected. We had already had an increased estimate for their cash flows, comes in 50% better than expected there. They also said, we're going to raise our guidance on our total profit margins. I mean, if you're investing in a hot dog stand at the end of the street and they say, we have cash, we're not burning through cash. We do not sell a hot dog, then turn around and buy a hot dog bun and a hot dog to resell it again. We're able to buy one and then put a little cash off to the side. They're also able to say, we were charging $1 for these hot dogs. We could charge $1.27 and nobody's blinking an eye. Therefore, our profit margins are bigger. Boil it down to something really simple like that and you go, okay, I see why everybody's so excited there. Costco, sales were up 4.4% year to date. For them, that's their fastest pace since about summertime. Remember, they went through a little bit of a lull at the beginning of the year there. So they still have this issue that you're seeing slowing spending. But the spending is slowing at a normal pace. I don't know how to say it, right? So Costco doesn't just sell more and more all the time. Occasionally people pull back a little bit and they spend a little more than they should, and then they pull back a little bit. That range of buying versus pulling back is still well within range there. I tried to get a visual for you. I couldn't get all the data before the show started here, but that's what I was trying to point out there. All right, Big Lots. I don't know how they survive, but sales down about 13%, but that was expected. Everybody had already lowered their guidance there. Inventories down 12%. That's good news, right? And their margins were just a little bit higher there. Not a lot, but it tells you, okay, sales overall are down, but they were able to raise some prices and people still paid it. So they kind of did as bad as everybody expected. You know, I don't want to give them the big thumbs up here, but that's kind of where it stands. Something really interesting here at Ford. So what you're seeing now is the accountants have, tallied up everything and said, okay, the strike cost us X. GM did that the other day, maybe yesterday. Ford comes out and says, so the strike will cost us $1.4 billion to our bottom line. That's after everything is accounted for, then $1.4 billion. I'm sorry, $1.7 billion to the bottom line. But they did something unique. They said, what will the strike cost us going forward per vehicle? Because, we're all out here, us layman people are like, oh, great, the strike's going to raise the cost of cars. Well, Ford admitted that today. They said, actually, the strike, when we bake in all the extra stuff we had to pay, I'm not saying it's good or bad, I'm just saying they put out the numbers. They said it's going to cost, we're going to have to raise the prices of a Ford, any Ford, by $900 in order to recoup just that. So their profits will stay the same if they raise the car prices by $900. You don't want to see that. That's not a good. GM and Stellantis didn't do that, actually, surprisingly. Well, I mean, I don't know. Maybe Ford was trying to get ahead of something there. We will see. Tesla Cybertruck's going out today. Not really a stock moving news, but if you like the Cybertruck, first some are going out today. There's now on the website. You can order one if you'd like. Put your $250 down. They'll let you know when they're ready to start building them. I don't know where I stand on this stinking Cybertruck. I don't know if I'm there or not. And Immunogen, They're getting bought out by AbbVie for a whole lot of money there. If you're not familiar with ImmunoGen, I'll do my best. I really don't like this biotech space of the world. It's boring to me. ImmunoGen's focus is, hey, we have cancer cells. Could we create something that goes and attaches itself to that and pumps essentially, I don't know, pesticide into it, right? Without having to do the typical chemotherapy stuff. And apparently they're onto something. That's the best I can explain it. There's fancy words and medical terms and stuff, but they're buying them, you know. I'm not your guy for the biotech stuff, and I'm man enough to admit it. Hey, tonight, Jazz After Dark. If you're not a client, you can't make our wine and wealth, that's okay, I understand. But the Jazz After Dark tonight, I'm going to talk about the chaos in December. Should we be expecting chaos? What do we do to prepare for that? And also, what should we expect? So we're going to go through the data. I'm going to use all the data that I've already shared with you here on the show, but now we're going to just pull it into December and go, how do we wrap up the year? And you'll be shocked how freaking spot on this has been this year. Just incredible there. All right, tomorrow, not really anything in the form of earnings, anything like that. Remember yesterday, Foot Locker had their big day, and we talked about one of the stocks that we own, which is Genesco. They will report earnings. They're really the only ones that I'm going to keep an eye on for tomorrow. And so we'll see. You're expecting to see something similar compared to Foot Locker. We'll see how that goes. You have Fed members speaking. And throughout the day, I think some came out today, but you'll have vehicle sales. You know, they occasionally come out and say that. So we'll see what that turns out to be for especially the guys that have been on strike, right? We will see. Equal weight beats market weight. Those are always interesting days. Yeah, they're interesting because they bring on the equal weight people on TV and they're like, this is it. We're going to do it. Now equal weight's the way to go. And they make their arguments and then turn out not to be accurate ever. Yeah. Any thoughts on Hawaii Electric after Maui fires? No. You could use PG&E maybe as kind of a guideline as far as like how they fundamentally handled their path forward, but no. So Disney in general, I want to love them. Bob Iger will get it done. Like if I had to put my faith in one guy, it's not Bob Chapek. I'll tell you that. I kind of ragged on that guy the whole time. He'll get it done, but this is officially kind of a whole, clean the house of the mouse kind of a thing, and they'll do it. I don't know what that means in terms of return to shareholders, be it stock price or dividends or whatever. I just don't know yet. There's a lot of these rumors going around about what they're going to do. So I like to sit back and watch, but I don't have any firm thoughts on that one. Amar, sorry if I said that wrong. So you look at Dollar General and you say, yep, now is time. Okay. I don't blame you. I'm not like disagreeing with you. I'm saying you have this moment of quiet. Of course, we see the downtrend. But from here, you say, well, I don't know if this is going to go higher. Now you have consistent, almost linear buying here. I can't blame you for assuming that you may have found something here. I can't tell you to buy it or sell it or anything, not allowed to do that. But if you saw that pullback and it was a simple, clean pullback, meaning it wasn't one of these big blast you down kind of days, you have every right to believe that the sellers have all but sold, right? And I'll also mention this is never an easy road to go up. When something has fallen apart like this, think about all the people that have losses. As that stock goes up, if you bought here and it gets to 140, you may consider taking a smaller loss, especially at the end of the year when you're able to harvest that loss and come back next year and try to make your money then. So don't expect like a big rocket ship higher. I wouldn't expect a rocket ship higher. Yeah. Now, right? Oh, man. 10 billion, Ostroff. That is the small to mid area there. Suggest a topic for Jazz After Dark. Oh, I love it. What happens to everyone's money if you and Eric go down in a plane crash? That's a fair question there, actually. If we both go down, well, first of all, the airplane has a parachute, the whole airplane. So we could go down, but statistically, we would actually survive. I'd be a little beat up, but that might be the case. There's actually two things that happen. I can make it a Jazz After Dark, but we have to have two contingency plans in place, which we do, or we'd be in big trouble if we didn't. And that has happened, or that has been required since before, or since after 9/11, sadly. Yeah. Yep. Yeah, how much can a large cap if a large cap could cap? I like it. These are my people. See what I'm saying? I don't want to, you'll never see like suit and tie people and using the language and stuff. I got to deal with that with Goldman Sachs. They all get a real kick out of me actually, because the one guy we were doing, I'll just share this. We were doing a meeting and it was Zoom and there's all these like suit and ties, and then the thing where they wear the shirt with the flannel vest over it, the typical Wall Street thing. So they're all sitting there talking and they go, Dustin, thoughts on this? And I had no idea what they said for like 20 minutes. These words, there's no progress being made with the words that they use. Anyway, so they talk for a while, and Dustin, any thoughts on this? And I'm like, yeah, who's that guy? Dude, he looks like the guy from Suits. And I was like, you should be the guy from Suits for Halloween. And they don't know what to think of me. Airplane heavily insured as well. Yeah, it has to be. It has to be. And they don't give you a break there. You know, if I could do it all over again, I'd probably go in the airplane insurance business. Somebody's making a lot of money. Yeah. Any Disney story today? What was the take on the Wish movie? I haven't seen it. I'm not actually much of a movie guy. To get me to sit still for that long, you know, it's got to be really good. Couldn't even tell you the last movie I watched, though I would watch the one with Denzel Washington, the one with Denzel Washington, where he's just a freaking hero, but he's a calm guy. And you know what I mean? It's like The Destroyer or something. The Tranquilizer? The Equalizer. So I've seen a little clip of that, and I'm like, that's my type of movie, you know? That's it. But no, I haven't seen it. Don't even know what it's about, to be honest. Yeah. The effect of Munger's death on Berkshire, not much, right? Not really much there. Right? And keep in mind, we've known about their age for a long time, and they've been really transparent about, hey, we're not going to be here forever. Look at these guys, right? Oh, Warren Buffett bought this or that, and they're very quick to go, no, that was this guy. He bought it. Warren Buffett had nothing to do with it. So I think they've set their succession plan pretty well. Just need that candy, chips, and a trade desk. Hey, that's true, man. Yeah, something to drink. Mountain Dew. Take a cherry Pepsi. Put some more cherry in it. All right, Dustin. Well, yeah, that's true. We'll see you at 8 o'clock. Kids Cooperate. So, got a full lineup tonight for you here. Jazz After Dark. If you're not a client or you just want to check it out there, that'll be live, or that'll be on YouTube. It'll come up at 7 o'clock. Then at 8 o'clock, we have Wine and Wealth, and I got to go find some wine, maybe get something to eat. I will see you guys then. Appreciate you watching, supporting, and all that good stuff. Adios.